One thing we keep hearing from buyers is that they want to wait for the housing market to crash before they jump in and try to get that great deal. Well, newsflash, the housing market's not going to crash. And I'm going to tell you exactly why so you can share this info with your buyers and get them off the fence and start buying. Let's rewind back to 2009. This is really what people nowadays are thinking about and thinking is going to happen. They're relating what's going on right now back to the housing market crash of 2009, 2010. That was a completely different scenario. And this is what you really got to explain to your clients. That market crashed because of the loose guidelines of the banking industry, where literally if you had a pulse, they would give you a mortgage and say, hey, go buy a place, and people would. That doesn't happen right now. That has not happened in a long time. Ever since that happened, the government came down, regulated the hell out of banks, and lending had tightened up. So right now, not anyone with a pulse can get a loan. You actually have to be really qualified to get a loan. So that's one of the biggest factors right now, is that lending hasn't loosened up to the point where it was, which really caused the crash. So we're not dealing with this crash that we saw a number of years ago, right? And that's one of the biggest things to understand. The second thing is, because of all that loose guidelines and all that loose lending and anyone getting a loan and buying properties, we saw so many distressed properties in the market at that time. And if you know anything about distressed properties, they are basically foreclosures, short sales. They're held by banks. Banks basically took the properties back that they kind of gave out when they were losing or lending to anyone, and they were holding them and didn't want to hold them. Banks don't want to hold any type of property. They want to sell it. They make money off the interest. So what they did was they basically said, okay, let's get rid of all this inventory. We'll price it super low so people will buy it. And that's what happened. Distressed properties were hitting the market left and right. And when they hit the market, prices came down. Today, we don't see that. There is not a lot of distressed properties on the market. And another thing to keep in mind is a third factor is that there used to be something called shadow inventory. Shadow inventory is something we would track all the time after the crash. And what it is the properties that the banks have on their books that they are still waiting to release out into the market. Because they know if they put them all out there at once, literally the market would crash and it would be insane. Way more than what we saw. That was never gonna happen. So those banks would basically take these properties and put them on the market strategically to sell them over a period of time. Fast forward to today, we don't have any shadow inventory. These banks don't have thousands and thousands of properties just sitting on their books waiting to hit the market. So in essence, there's no distressed properties. There's no potential distressed properties. So the prices that are going to plummet like everyone is, or these buyers think is going to happen, it's not going to happen because of those two things, all right? Another thing is that we're still dealing with an inventory shortage. I mean, a healthy market, for reference, is 6 months worth of inventory. Meaning it would take 6 months to sell out an entire area if nothing else hit the market from that day going forward. Right now, a lot of places around the world, around the country, are dealing with inventory around 3 months. That means it would take only 3 months to sell out everything on the market. And that means if there's a shortage of inventory, there's not going to be a flood of properties hitting the market that's going to cause prices to go down because supply and demand, prices go up when there's no inventory. And one of the last things to mention is that our interest rates. Yes, I got to bring it up. I know you don't want to hear about it. You're probably sick of hearing about it. But the interest rates are playing a huge role in a lack of buyers in the market. Now, if you're selling right now and you have listings, you probably have seen this where there's not a ton of buyers out there and there's actually more inventory than buyers in a lot of areas, which if you just remember what I just told you, there is really no inventory. That's how minimal amount of buyers are in the market right now, where buyers can actually take their time and has options on properties they could pick from. That's how small the buyer pool is. So if there's a minimal buyer pool, guess what? That's an opportunity for your clients, for your buyers to jump in the market. Because as soon as those rates start to go lower, like they're expecting to, everyone's going to jump back in. And now your buyers are going to be faced with the competition level that everyone was seeing in 2021. It's not going to get to that level again, but if your clients don't want any competition, tell them jump in now. Hell, they could always refinance if the rates do go down. Okay, so look, in short, we are seeing kind of like a balanced market right now overall. Maybe it leans a little bit more to the buyer side, but that's the opportunity these buyers should be looking for. It's not going to crash. Tell them that. Tell them to get off the fence. Explain it to them, and just know that if they listen to you, they are going to thank you for buying now instead of when it gets hot again. So that's it for this video, guys. Thank you so much for checking it out. Again, if you really like our content, we suggest please subscribe to our channel. Hit that little bell. We put out videos every single Monday at 9 a.m. Central Time. This is just to help you guys out, so we hope you subscribe and check them out. Thank you for stopping by. Looking forward to talking to you on our next blog.